Welcome, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take those thoughts and opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, September 29th, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and the theme of this week is treading water, trying to keep your head up. Not a lot of action this week. We're just going to kind of recap a couple plays that we have going, a couple things that we're looking at. No big themes as far as strategies or things like that we're going to talk about. But before we hop into what Viper and I are trading this week, I want to give a shout out to the Discord. There's a link in the description below, and this episode is being streamed live to the Discord. So hop on in the Discord, follow that link. Love to have you. Say hello. Love to hear what you're trading. Love to hear what you want to hear from us. What do you want to learn? There's also a link to thetagang.com/sprocket888 where I post all of my trades, the good, the bad, and the ugly. But let's get to this week's action. And let me tell you, I'm feeling a little deja vu this week from last week. Last week, we had a big down day to open the week on a Monday. This week, we got our big down day Tuesday yesterday. And, the week last week didn't really finish out super strong. The markets are super choppy, in my opinion, and everyone just seems real on edge. Given any little bit of bad news, the market kind of wants to dive one way or the other. So I don't have many plays actively out there. I mean, I have quite a few plays that have just treading water, waiting for them to come in. I didn't put really any new ones on. The biggest moves that I made this week were in natural gas. So I had a large strangle on the futures of natural gas. And if you caught any of the news, natural gas is in great demand and shortage around the world and has been going absolutely nuts. The volatility in natural gas futures was over 100% in some of those options, which is just crazy high. I got a little scared, and so I took a couple of losses trimming my upside risk because I was really afraid of getting run over. I still have flashbacks to soy, so I trimmed a lot of that. I'm now bullish tilt in natural gas, and so my positions have no short calls. I have one short put, and I'm long one future. So I guess natural gas is clear to zoom, from my opinion, but it'll probably go the other way.
That's how it works, though. You get to call it.
Yeah, so I'm positioned for a very bull run on natural gas. Right now, my cost basis on my trade break even is about $5.40. I think it's currently just a hair above that right now, but the past couple of pushes have been in the 7 to 10% range upwards. So the chart is looking kind of interesting, and we might pull it up maybe towards the end of the episode. I don't have it pulled up right now. The only other thing I've been doing is I took an assignment on some Apple shares and some Citi shares about 2 weeks ago or so, and financials really been on a tear with the latest interest rate moves and things like that. And so it's really kind of approaching a level 72.50 level on Citi, and I went ahead and sold a call against that, basically at the money. I just don't think it's going to break through. I think there's too much friction. So, if I get assigned, okay, I get assigned and I lose my shares, but I did pick up about $540 in premium there. Apple really seems to be kind of taking a little bit of a bearish tilt lately. So there was a slight run up, just ever so slight today, and I decided to sell a couple of calls to try to collect some premium. Aside from that, that's all I got going on this week. Viper, what have you been looking at? What kind of trades have you been making?
Yeah, so my theme of this episode is we're going to say dodging bullets. And not dodging them because I'm lucky, dodging them because make a play, make a plan, stick to the plan. And this past week was a big affirmation of that ideology. Had some plans, had some plays on play that I talked about last week on last week's episode, AVIR, which was one of the ones that we discussed in the Discord. So we're going to see how that ended today. And basically where I'm at is with all of these things, as you'll see, my books are basically clean right now, and I'm on the hunt for new plays. And I mean, there's two ways to look at that. One is I'm not being very efficient. The other, but I'm also not. That's not my my strategy with my portfolio is to be in 100% of the time. I kind of, especially after recent losses that we talked about, I've been very much looking forward to being able to lock some wins in, and it's kind of a good feeling to lock in some wins. I took a loss, but you know, it was overcome by the wins, and just to be able to like sit back, take a breath, and then something like Tuesday happens, and I'm like, I got nothing in there, so I don't. It's fine.
I'm jealous. I'm jealous of your clean slate. I want a clean slate so bad because as a premium seller, this is so ripe. Volatility spiking on the VIX and everything. I don't have any free capital to put out there, so very jealous of your clean slate.
Yeah, it's I'm not complaining. So let's hop in here to the first one I want to talk about. This is SFIX, Stitch Fix. So kind of what I want to see. So Stitch Fix is one of two indexes or equities that has come across my radar through my screening methods, which we've talked about before. In the basic premise of showing a reversal, a trend reversal at an important level, and then jumping on it for the next potential gap up. So at a very zoomed out view here, we can see this 3483 around here towards the bottom is what could be a potential bottom for swings. You can see that we launched a big swing out of there. We came back down. We launched another swing. We came back down. And then now we're sitting out here. This is a down pattern, but we are with a common baseline here at the 35-ish realm. So that's important to me, is seeing that steady baseline that we keep launching from. We're not losing that level. And so then that's when I like to get in. So my play here, if we zoom in now, was just in recent days. There was earnings, and earnings were good. So as I've mentioned in the past, I like news that sends things up. We go up here, and then the criteria I was looking for to buy in was this clearance of this previous resistance here. So we cleared that. I bought in. I had my price target set up here at 46, and I set that based on some of the patterns in the chart previously. But as you can see, I opened up. We got a good pump up on the next day. This was the day I was clearing things out, and I was very tempted to break pattern and be like, look, it's up a little bit. Let's just take it and lock it. But I was like, nope, this is the play I made. Let's stick to the play. So I stuck to it. And as you can see here, I did get stopped out on my stop order. But here's affirmation one on this particular thing: the value of the stop order. I mean, this isn't my full-time job. So I put the stop order in. I walked away. I had the limit order in, not paying attention to it. I come back, and this thing, holy moly, like came crashing down the last couple of days. And that this is now at a point where I'm done with this. I don't want in. It could be coming back down to this level. This is not a good pattern right now for me to be interested in. I may keep it on the radar if we do get back down to that 35 level, but we got to keep in mind this downtrend that it's been in. We could be coming down to test and then lose that 35 level. So, that was the play. The play was we got a reversal, a potential reversal here We had news in the system with earnings. Earnings were good. It popped up, cleared the resistance. I was making this play. That play didn't happen, so we moved on.
Now, is
So-
this with this one here? Would you consider watching this one to see if it approached that level that you have marked down there around the 35.50, and consider a play if it started acting as support, or that just doesn't meet your strategy?
No, I'll definitely keep an eye out on it, because, you know, I can't ignore the history of this level, and, you know, kind of how we've regularly come down and gotten some really decent support out of it. So I'm keeping an eye on it, but one thing I'm not doing is because of that downtrend that it's in, I'm not going to just set a limit buy to sit here and wait, because we'll see in some other plays where I should have used a limit buy based on the levels. This isn't one where I want to auto buy and have an OCO the order up. So I want to see what happens when we get back down there. If we can regain another uptrend, another swing up, that'll potentially, I might go for a little ride on that.
Yeah, I look at Stitch Fix quite a bit, just because the volatility is usually good on it. So one thing I've been kind of considering is, as we approach these kind of key levels, if they act the way that you think they should, usually volatility doesn't come in fast enough, and you could put a naked put or something on well below that level, you know, say a 30 delta from that price level.
Yeah, that's a good point, because we have the history of this level, and that's a good call out of the power of working some of that naked put premium into your strategy, because this is exactly a scenario where I might want to do that, when I don't quite have, like I said, I don't quite have the confidence to go shares when we get to that level. But yeah, when we get closer to that level, throw on, you know, like you said, a 30 delta naked, and then now we have that built-in buffer of, even if we lose that level, you know, depending on where that is, you know, if we lose that level, I'm kind of looking at 30.75 as a potential next level for reaction. And I mean, without looking at the option chain, I would think that a 30 delta could be around that 30 strike, which would be plenty of an option. So
yep,
definitely. So the next play is, as I mentioned, AVIR. So let's take a look at that one. Like I said, this one came in from the Discord, and it kind of came in because of this recent action. Again, you know, slight uptrend, and then we're kind of going sideways, and then we started another uptrend pattern, and we had confirmation of this level here as we started to bounce. So if we take a look at how I played this, I bought shares here at 28.01. After we kind of got confirmation of this level here, I jumped in there. And the play this whole time, because yes, there is a ton of potential upside here once we clear this recent resistance level here, which is at 34-ish. There's some serious gappage both up and down above that level. So there is a long play to test those gaps and try to see if we can fill in some of that. However, my play here was never meant for that. What I wanted to do was I recognized the uptrend and then get the test on this peak up here. And then I want out when we get close to that. I think that's what I talked about last week. I said, last week it was on this little pancake red candle, was, I think, when we recorded something to that effect. And I said, we're getting close, and we actually cleared this local resistance here. So I said, all eyes are on this to see when we push up. And as soon as we get close, I'm out. I want to capture that level, and then I want to wait and see what it does. Maybe it reacts a little, maybe it goes sideways, maybe it straight up retraces and rejects. And this is exactly why I did that, because we can see that we got up there, and then now we are just in a reactionary retrace. Maybe not a full on retrace. It's a little too early to tell. See what happens here in the next couple of days. It could come back up, but this was my golden textbook win here. Bought here. I had the play marked out, and it stuck straight to it. I stuck to it, and actually on this one, I want to take you into the 5 minutes will probably be good enough, because I had some fun with this one. I knew this day was coming because, like I said, when we recorded, let me go back to the daily for a second just to show what I'm talking about. This was last Friday, and like I said, when this pancake happened here, I knew I didn't know, but probability said tomorrow's going to be a good up day, because now when we had this close here, we were above, like I said, this local resistance over here. And so there is nowhere else to go but up to this previous resistance here before we get a reaction. So I specifically was paying very close attention on Friday to opening action on that, because typically what you'll see is a good surge in the beginning of when the market opens. If something is this favorable, that first 30 minutes of trading, 30 to 45 minutes, you're going to get all kinds of good action. And that is sure enough what happened. We're looking at the 3-minute chart here. And this was opening on Friday. So we opened, and then we just started rocketing up. So what I did is, I don't have after hours prices on here, but I watched it pre-market and saw that everything was holding steady to the previous day's close. So as soon as we opened and got that strong reaction, I dumped in more shares, because at that point, now I'm just doing a quick scalp, nothing but runway. We're going to, chase that level up there. Had the capital to play with, so dumped in shares just for that scalp. And then right where that sold line comes in, I closed everything. I could have closed partial and left a runner just in case it blew through the level. But once I decided to dump new shares in, I don't want to mess around with the runners, because now I brought my cost basis up by jumping in there. So I just wanted to scalp and get out, and I did, and absolutely no regrets. This was a good win for price action.
Yeah, it's a nice textbook play there. It's like buying pretty close to the bottom there of the swing and selling pretty close to the top. It's you can't get much better than that.
Nope. And you can't do them all like that. Like, it's not.
I'd be happy with just a few.
I'm not claiming any sort of, I'm amazing at it. Like, it's just every now and then you're fishing. That's all we're doing here is fishing, and something strikes. So moving on, MVIS is one that we've often talked about on the show. And specifically, I use it. I'm pretty sure Sprocket uses it as well for just a naked put vehicle. Probably not as much recently, because as we can see previously, the reason we used it is look at this volatility. I mean, we are just rip sawing up and down, and it was great back in early 21, even back into, I guess it wasn't quite 2020. But as you can see, we've slowed down a lot, and we've talked about, I think, one of our previous stalemate episodes that, there was probably even an MVIS play in this range. However, for whatever reason, I took another naked put on it. And I believe I opened it around, back around early to mid-August, for the October. So it was the October expiration, so it was probably late August. And I had a good opportunity to get out on this run up. And I do regret not getting out, just because, I think around then it was getting close to meeting that 40% threshold that we talk about on naked plays and whatnot. And then we just started losing, and we tested the 12, and we got a bounce off the 12 here. But when we got this bounce, I was like this day, September 23rd, I really wanted to pull the trigger, but I was also in that emotional state of like, no, this is the bounce. This is the one. And then next day we got another almost test down to the 12. And then on the day after that, September 27th, we came back up. And as you can see, the characteristics of this closing candle, I mean, it's a lower high. And I was like, you know what? I'm done with this. I can close it right now for 30% of my premium that I collected. Let's do it. Let's lock it in. And that was the spirit of this past Monday was I want to just close things out. If it's in a profit zone, close it out. Let's clear everything out. And now, boy, am I glad I did that. Because we are just down candle. This is just a harsh down candle here. So it'll be interesting if we're now broken this level. If we kind of continue down tomorrow with the strength of that. But I don't care now because, I got out here. I would be looking at, I don't remember what my break even was, but it's coming up close here for sure. Because now we're getting deeper in the money.
Yeah. So zoom out just a bit where you were talking, I just want to make a call out here on the power of premium selling. So you called out there on that recent run up where you said, man, I really wish I would have sold around here, where you were probably talking, 40, 50% profit, something like that. Where it wasn't quite enough and you didn't get out. But look at how far it fell, how close you got to your strike, and you still got 30% off, or 30% of your profit back. And that's really that theta decaying. So I'm guessing these were October expiration. I don't remember if you mentioned that.
Yes.
So we're really kind of coming in here on the closing days of October, the couple weeks, and the decay really gets going faster in the last 20 days, 21 days. And so even though you had a big move against you, you didn't really lose that much premium in that move against you, just based on that theta decay and that power of premium. So when we say time is on your side with options, this is kind of what we're meaning here.
Yeah, absolutely. And obviously a part of that is when you get that time decay, and there's a couple decent dips in here, but not enough to like really spike volatility or anything like that, which would obviously raise the premium. So that's kind of, if price is going to go quote unquote against you, but you're able to use time and you're not getting volatility, it can bleed off all at once because you're not getting that volatility bump. And so you just, get that back on the time that you're getting. But yeah, these were October expiration, which, I mean, we were getting fairly close to getting into that 18, 19 day, to expiration, where that was, again, part of the motivation of like, let's get this out of here, and move on. I don't want to mess with rolling, because now if I'm still in this and we're down here at 11, 12, I'm probably starting to get out the different strategies of maybe rolling it. Let's wait for it to come back. And I think as we heard on the outset, somebody's very familiar with that right now, and it's not a fun place to be. But it is a nice place. It is a nice option to have if you do get stuck. After last week's episode, we kind of got to talking with one of the Discord members about he trades more crypto, and what really got me thinking was he called out one of the reasons that he plays crypto is the liquidity is so ridiculously high that levels are just nailed, and everything just sticks to levels. It's just a textbook, experience in price action. And so I was like, you know what, let me, the time that I got into these plays, it was a couple day bump up in the crypto world. So I was like, oh, let's do it. Let's play around with a little, just very small positions, and just kind of test the waters with just full on everything we've talked about in price action. Because the last time I traded crypto, it wasn't really with all of the context of price action that we're kind of trying to build here. So the first one was the basic attention token, BAT. There's also a lesson here in entry points. I called this out last week. I broke all the rules on, on entry points, and I kind of did it. I did it knowingly because these were such tiny positions. You know, $50, $70 just to muddle around and test it out. So, I mean, at least does that count for something? I knew I was not entering correctly.
Yeah, position sizing is a mitigation.
Yeah. So on the Batcoin, we kind of see here we have this yellow top is what I really want to get to. You know, that's the previous resistance of this previous swing. The green line at the bottom is what we currently have as a known rock bottom support. That doesn't mean it can't be broken, but it is where we have kept coming down to and launching some pretty significant swings from. That last swing being up to almost $1. So with that in mind, I don't want to shoot for the moon. So I bought in here, like I said, number one sign not to buy is, you know, this yellow. Let's see why I marked that yellow level. So I marked that based on previous local resistance here on the swing up, the previous fail before we got a successful swing up. So that to me is a very important level. It's at around 61 cents. So knowing that I should not have just dove in after these couple big pump up days, I dove in anyways. But I had this charted out. I had this yellow line already mapped out. So I entered where the buy line starts. I entered knowing this isn't a great entry point. And I even said to myself, you know, what I should probably do is put some sort of limit buy on the level that I've identified, because that would be the smart play. And just emotions of like, I just want to test this out. But if we look, I mean, I don't know. I mean, that just dink, we came down. I put my stop, and you know, the next day we got a big down day, and we came right to the level and just kissed it, to where, you know, perhaps, I mean, because crypto trading, you don't get to do market orders. Everything's a limit order. So maybe I wouldn't have gotten filled, but that's not, but if this was, you know, textbook price action, it would have been a limit buy at a market, you know, submit a market order. But that was affirmation, even though I clearly lost money, that was the right play to wait, put the order in at the level. And in this case, I'm fine putting the order in at that level, because that is the level of tests where we were bouncing off of. We just bounced off of it. So we got some semi confirmation of the level being support. Excuse me. So then we continued down, and we got a couple more tests off of it. And then I ended up getting stopped out. As you can see, the stop did not, it was an aggressive stop because I didn't want to mess with a big, you know, runoff or anything like that. I was just keeping it tight. So we might still be getting support here. And this was maybe just an aggressive stop. But you know, it's fine. It was, I think this one was $50. So not too worried about it. On the Litecoin side of things, here's at a high level where how that charted out. Again, the green is where we're kind of looking at our rock bottom support level. I mean, if we go way back in time here, we've launched two massive swings from this level. $37. First swing goes way up to all-time highs, 387. We work our way back down. We do a little mid swing here. We come back down, and then we launch a swing back up to that 387 level. So I'm very comfortable charting this 37 level and making it green as a potential. Everything is at risk of coming back to this level. However, to me, 148 here, this yellow line, because of this failed swing up, or, you know, this failed attempt to get over that level again and then coming back to it and achieving it makes the yellow a very interesting level for me, and one that I would not mind basing some trades off of as we take this rapid decline back to this level, and then we kind of get some potential support off of it. So now if we zoom in and kind of see what was unfolding here, we have a similar story unfold. These two candles, this is when I jumped in, knowing that I was, jumping in a bit early. There it is. So I bought in. I've actually bought a couple times. So this is a lower cost basis than when I did buy. But I bought on this day, somewhere up here in this candle. We retraced, and look at that wick. Once again, we came back down, and we just dropped right to the level, kissed it, and ran away. At least ran away to the point where if it was a big enough position or something, I could have closed that out next day for a decent profit. But also interesting here is stop has not been triggered. So, very much, again, if it was not such a just experimenting play, I would definitely be regretting not setting some orders on that level, because we've clearly come back and we're testing, maybe bouncing off of it. But I am very happy with how the stop is placed, positioned, because we came back down. If we're looking at these candles, 1, 2, 3 candles came close, but we missed it. And now we're potentially getting some decent support off of here. So that guy is still going, and still hoping for that 180 target, because to me, that is the next level to test on the upside. We'll probably stall out again around this 165 where we lost, or where we took down. But just kind of what I'm looking at, what I'm thinking, how I'm making the plays. So at this point, those two crypto, the one crypto experiment is all that's kind of out there right now. And other than that, I'm clear, and I'm feeling pretty good, which is a good place to be. And we'll take a look at the screener maybe tomorrow or something, and kind of figure out where I want to go next, and talk about it here. Oh, one last thing. So this is one thing I'm watching based on my screener is DVAX. So I found DVAX at the same time that I found SFIX, which was right around here. DVAX was pushing up. Yellow is my hard line of we need to close above 2021 for me to jump in, because that is that local resistance previously. I need to see that overcome before I, actually enter to this play. And then I'm targeting 2410. I might, depending on the action to get there, might leave a runner to try to go higher. If we zoom out a little bit further, we can kind of see where those are coming from. So we can see these two previous swings. Again, we have this fairly solid bottom here at 219. And then, if I'm looking for the downside, around this $12, $11, I don't want to be around to test that. But 21 is coming from previous resistance above this level. So that's why it's important to me. We first have to close above 2021 here. Once we close above it, then the game is on to try to get up to 2410. When we get up around there, I could close everything depending on the position. Or if we can close above that, then it's game on potentially to 32 after that. So not making a play on this yet, because this is a strict play of we got to achieve that level before we can even think about the next one. But this is one that I am watching just to see the action. We saw we got close. We bounced off of it, but we're closing back in on it. So could be getting into a pendant pattern, and maybe we'll pop up. Maybe we'll just hit it and drop. But that is the one that I'm currently watching. See what I can find out tomorrow and maybe talk about next week.
Let's take a look at natural gas. I know we talked about natural gas a little bit early on in the beginning. So let me show you just a chart here that I have of natural gas. Um, so this is the modification. I actually made this modification today. This candle here is, I think it was like a 13% move candle. And natural gas has just been at levels it hasn't been in for a very, very long time. And I actually started trading this whole natural gas play way down here before we started hitting this first 8% candle and it started going nuts. And I was just on the wrong side of everything. I kept having short calls here and there, getting run over. And so I'll fast forward through all this movement here. And basically today, I had made some adjustments right here when we hit the not all-time high, but recent highs going up to about 630. And I went ahead and I shifted out some of my short calls just a little bit further out in strikes, made some modifications. I had some raw futures. Then we had a real big pullback yesterday. It was today. Like 7-8%. And I said, you know what I need to do? I need to take this opportunity of this pullback and I need to get rid of these short calls because I keep getting crushed in short calls. And so I used this pullback a bit to close out my short calls, not for a profit, unfortunately, because I had rolled so many things and done so many maneuvers. I took a small loss on it. But if you accumulated everything that I had done up to that point, I was about at a $5.40 break-even price. And the one thing I noticed on this chart here was right here, we previously got resistance around $5.40 level, where it kind of pushed back down to this 21-day moving average before, rocketing up again. And so I noticed that a lot of the price action had really kind of stalled. I mean, we fell off today, but it really started slowing down and kind of hovering around that 540 level, which happened to be kind of my break even on the trade currently. And so what I did was I kept my long future position, which has essentially a cost basis of $5.40. I closed out all of my other option positions. And then I took a short put position at $5.40 strike. So it was roughly an at the money position. Now, all this expires, they're November contracts, but in commodities, they expire at the end of October. And I sold that short put for about 50 cents. And what that allows me to do now is it pushes my break-even point from 5.40 down 50 cents to about 4.9, which is a little bit below this 21-day moving average. And you can see this 21-day moving average has been a pretty good realm of support in the past. And all that I've been hearing about natural gas is there's shortages everywhere. It's particularly bad in Europe. They're talking about the cost of natural gas in the US would have to get to like $12 before it's cost prohibitive to import it into Europe. And so, this price action, I said, it might stall here, and who knows, I got like 2.5, 3 weeks left before this thing expires. I'm really hoping for a big bull move off of here because I took away all of my upside caps and there's no cap to my upside. And one other thing I want to bring up, and I'll get your take on this, Viper, is one of the other mechanisms I've been looking at is this call premium, what the balance of the skew between the puts and the calls in the option market. And they are extremely tilted with call skew. And I believe what this is actually telling me is there is a lot of people placing a lot of trades on the call side of natural gas, which means that the market, and I think, sees a lot of potential for an upside move. And that's why there's so much premium here, is that's where the risk is.
Yeah. No, that I agree. I think I would imagine some of that call skew is as is the nature of the futures, speculation of, like you said, current events and where that's at. I think we looked at the NG chart on one of the episodes when you were either we looked at it on the episode or when we were texting back and forth because you were getting hurt by the upswing. And we're kind of like, if I jump back over to my screen here, going back, let's actually go to the weekly because the daily is just a little too small. You know, we have that $6 level here that we're at, and we're giving it a good test right now. But if we clear above that, you know, then there's certainly some more detail that needs to be sussed out of this noise here. But in general, you know, there's a good potential for another little blip up. You know, we could, I mean, this is just without actually looking very detailed. So even more less financial advice. If we break 6 and get some good support off of the 6 level, because again, just to reiterate, that is clearly the level here. You know, we have this swing up here, we had it back here, so we've got 1, now 2 tests against it. If we achieve it, I'm seeing, you know, maybe 660 small, but I'm probably thinking more 765, you know, pushing up in that direction for the next level. So there's, I'm sure that call skew makes sense both from speculative on the situation. I mean, but even without the situation, price action here looks good to the upside. And that, you know, like I always say about what I'm looking for on good plays, like it's the price action, but then it's a driver, a catalyst of some sort. In the case of a lot of my plays, it's news, earnings, whatever. But yeah, that definitely, I would agree. I would certainly at a minimum agree to the idea that it is very bullish right now, with a lot of good reason.
Yeah, we'll see. I'm latching on to that news cycle a little bit, that they're just pumping the shortage, they're pumping the demand, and you know, the price action kind of reflects there's a lot of support for it too. So it's a little atypical of me to make this type of trade. I usually like to just burn theta on both sides. Very seldom do I put such a directional play on. So stay tuned. We'll see how it shakes out.
Indeed. And this time you're not fighting the trend.
Yeah, yeah, yeah. That has burned me a lot in commodities, is those certain things against the trend. So, you know, I guess we'll find out what happens. I could be sad, and maybe it'll make up for my earlier getting run over already a few times on natural gas. So, all right. Well, that brings us to the end of this week's episode. As always, we'd love to hear from you in the Discord, see what you're trading, hear what you want to know from us. We'll keep you posted in the Discord on what we're looking at, plays we're looking at trading. It's going to be choppy out there in the markets, I think, but for premium sellers, it should mean some volatility's coming in. Lean on that price action, follow your charts, and remember, think outside the block.